As we were growing up, there was not much emphasis on money matters, how to grow it, how to keep it, the facts about money. But the little that included financial education was that savings should be put in a bank, and so owning a bank account was a goal for everyone. It was something that would be. There was not much question about who was supposed to have one, and we do have a bank account. But as we grew up, we learn more and to get exposed to so much, and then you get to learn on what works for you and what doesn't. Hi, I am Leleti, and here we talk about money and general lifestyle issues. So currently, the rate of inflation in Kenya is at 8.32, if I am not wrong, but we are way past 7%. This is quite a leap from the 6.5 previously. Anyway, so part of your goals always as you save money is that at the very minimum, at the very least, you beat the rate of inflation. That means that you should put your money in a place where the interest rate is at the very least above or equal to the inflation rate at the time. When you put your money in the bank, most, if not all the time, it does not earn any interest unless it is on the fixed account basis. However, if you were to use a SACCO for the same, then you would have more options. These options include the fact that your shares, you have the option to buy shares in a SACCO. When you buy the shares in a SACCO, which are mostly at 10 shillings per share, you become a part owner of the SACCO, and therefore you are entitled to a dividend. As part owner, you are entitled to a dividend. You also get some interest in your savings. Most of the times it's about 10%. Therefore you are covered from inflation. And also your money in the bank is as it is. If you were to get a loan on it, you would require either a payslip or an asset to guarantee the loan. But in the SACCOs, what is required is your shares. Your loan can either be covered by your shares or by members. By the way, SACCOs are cooperatives. They are a group of like-minded people. So therefore, it is supposed to work for the interests of the people, of the members. So this is not something that has been imposed on you. It's not other people making rules for you, but it is members making rules governing it for the sake of the members. So you have a say, and your say actually matters. This is not a commercial entity. It is not outsiders. It is us members doing this for us. Once you are in a SACCO, your deposits are multiplied by 3 for you to get a loan. So you are entitled to up to 3 times your money. So if you have saved 600,000, that means you can get up to 3 times that, which means that you can get at least 1.8 million on the 600,000 shillings that you had saved. This is guaranteed by members, meaning that you don't have to have an asset that is worth 1.8 or 2 million for you to cover that, to guarantee that loan. It is also the loans are processed much quicker, and so you can get your loan very fast as long as you have all the requirements. The processing is very fast. The other thing is that the process of buying shares, which are assets, we have been talking, you should be acquiring assets and not liabilities, is very easy, because all you need to do is to walk into a SACCO and buy your shares. Mostly it's at 10 bob per share. Just buy your shares and you walk out. But in a bank, if you wanted to buy shares in a bank, you would need to you need a CDS account, because they are traded publicly in the Nairobi Stock Exchange, and then you would fill up the forms and then you are able to buy. You can't buy without the CDS. You will buy as you would buy any other public traded company's shares. I'm not saying it's much harder, because these days the CDS accounts are everywhere. You can have them you can open one in a bank or in an insurance company, so it's not that hard in a way, considering not like before that you had to go, but this time you just buy and you can trade even online. You can buy and sell. The thing with SACCO shares is that they don't buy them back. What you have to do is sell them to someone. You take the initiative. You actually sell them to someone. The person gives you the money and then you transfer them to them, because the bank is not buying them. The idea is that they would be listed, go through the process of getting listed in the NSE, but that's what they say anyway. The other thing is that they normally give lower loans than the banks, but if your shares are if you have saved quite an amount, then you, as I have said before, you will be entitled to 3 times. So what I'm trying to say is that what has been publicly traded is that we should be saving in banks, but there is another school of thought that you should only be using banks for transactions, to receive your salary, to transfer funds, to pay your bills, but not to keep your money, because they don't even keep your money there. They are going to give that money to someone else who's going to make them money. So your money is not like it's there. It's not like it's in their bank. And then it's good to be building a portfolio for yourself. You're saving your money, so in the event that you require a loan, all you need is about 3 to 5 of your friends in the same circle for you to sign for the loan, and you're home dry. You get your loan and you're able to proceed to whatever you are going to do with it. So I will just to recap the advantages of having your savings in a SACCO is that you get at least some interest on your savings. You get to own part of you get to buy shares in the SACCO, and it is very easy to do that, and owing to that you get dividends either annually or biannually. Biannually is 2 times a year. It is guaranteed by members, and therefore you do not require an asset or a payslip for that matter, because there are payslips that do not matter to the bank. If you're not a civil servant or entities that are working in partnership with banks, then your payslip is not any good to them, and it is very easy to buy their shares. Their loans are guaranteed by guarantors, members, and the repayment period by the way of loans in the SACCO is shorter than that in the banks. The bank's repayment period is very long, which also means that maybe you get to pay less premiums, but at the end of it all, you will have paid a lot of money, because it has dragged so much. So you have paid a lot of interest on the same amount that you would have paid in a shorter period of time, and most of it would have been going to the principal amount and not to the interests. So maybe I'm not very clear on which is which, and that like which is better, whether you should be using banks for transactions and SACCOs for your savings. But it is because it is very intentional, so that you make the decision on what to do. But you should always have a backup of a SACCO. You should try. There are many SACCOs out there, many institutions, like the police have STEMA SACCO. These most companies fly us with SACCOs, so find one that works for you, that has like-minded people as you. As we have said, it is a cooperative, so it should be made up of like-minded people as you, and you should be having at least 6 to 7 friends in the same circle, so that in the event that you require a loan and you need guarantors, that you are able to get the same from your friends, because only a person who knows you well will be able to guarantee you for money. So thank you so much for watching. I'll see you on the next one. Kindly like, subscribe, and comment. please share. Are you in a SACCO? And if so, which one? I'll see you on the next one.